What if I told you that becoming rich through the stock market isn't about luck, timing, or even having millions to start with? What if the real secret lies in something much simpler? Understanding how money truly works. However, most people never learn this. They chase quick profits, panic when prices fall, and quit right before the magic happens. So, in this video, I'm going to tell you the only investing guide you'll ever need, a story-driven roadmap that can change how you think about wealth forever. But here's the catch. Everything I'm about to share goes against what most people believe about investing. Ready? Let's dive in. Chapter 1. The Illusion of Getting Rich. Quick. Imagine standing in front of your computer. Charts flashing, prices rising and falling every second. The temptation to buy and sell quickly is overwhelming. You think, if I can just make the right move, I'll double my money. But here's the truth. This is exactly how most beginners lose. They mistake movement for progress. The stock market isn't a casino. It's a machine that rewards patience and punishes emotion. The fastest way to lose money? Trying to get rich fast. The richest investors you've heard of, Warren Buffett, Charlie Munger, Peter Lynch, didn't strike gold overnight. They played the long game. So the first rule, don't chase money, build wealth. Chapter 2. The Power of Time. Your real superpower. Let's say you invest $1,000 today. That doesn't sound like much, right? But what if that $1,000 grew at 10% every year for 30 years? You'd have almost $17,500. Now imagine adding a little more each month. Suddenly, your future looks completely different. However, most people underestimate time because they crave instant results. The market rewards those who wait, not those who watch. Every great investor knows that time in the market beats timing the market. So instead of asking, when should I buy? Ask, how long can I hold? The longer you stay in, the better your odds become. Chapter 3. The Psychology of Money. You can know every technical indicator, read all the charts, and still fail if you can't control your emotions. Investing isn't a test of intelligence. It's a test of character. The market will test your patience, your discipline, and your belief in yourself. When prices fall, fear whispers, sell before it's too late. When prices rise, greed shouts, buy more. But successful investors do the opposite. They stay calm when others panic. They remember that emotions are temporary, but strategy is permanent. So, the second rule, control yourself before you control your portfolio. Chapter 4. Understanding the game you're playing. Here's something most people miss. Not everyone in the market plays the same game. Day traders, long-term investors, institutions, they all have different goals. But when you copy someone else's move without knowing their time frame, you're playing the wrong game. So ask yourself, are you investing for 5 days, 5 years, or 50 years? Because your strategy should match your purpose. Long-term investors don't care about short-term noise. They focus on businesses, not tickers. Once you know your game, you stop comparing yourself to others, and that's when real investing begins. Chapter 5. The Power of Compound Interest. Albert Einstein called compound interest the eighth wonder of the world, and for good reason. It's the quiet force that turns small investments into massive wealth. Let's break it down. If you earn 10% a year, your money doubles roughly every 7 years. That means $10,000 today could become $80,000 in 21 years, without doing anything. However, this magic only works if you let time do its job. The moment you interrupt it, by panic selling or constantly switching investments, you break the cycle. So the third rule, make your money work while you sleep. Chapter 6. The Myth of the Perfect Stock. Many new investors waste years searching for the perfect stock, the one that will make them rich overnight. But here's the truth. Perfection doesn't exist. Even the greatest companies have bad quarters, scandals, and crashes. The trick isn't finding flawless stocks. It's finding great businesses at fair prices and holding them long enough to grow. You don't need to predict the next Apple or Amazon. You just need to own companies that consistently create value. As Buffett says, it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. Chapter 7. Diversify, but don't overdo it. Diversification is your safety net. It's the shield that protects your wealth when the market turns unpredictable. Think of it as your insurance policy against bad luck. However, spreading yourself too thin can do more harm than good because the more stocks you own, the harder it becomes to truly understand them. For most investors, owning 10 to 15 solid, well-researched companies is more than enough. Beyond that point, you're not investing. You're just collecting names. The real secret is balance. Enough variety to reduce risk, but enough focus to let your best ideas grow. You don't need to own every stock in the market. You just need to own the ones you understand and believe in for the long run. Chapter 8. The Power of Index Funds. If you don't want to spend hours analyzing companies, there's still a path to wealth. Index funds. They're simple, low cost, and outperform most active investors over time. So instead of trying to beat the market, you can own the market. That's the genius of it. You don't have to be smarter than everyone else. You just have to stay consistent. Index funds allow you to invest in hundreds of companies at once, giving you instant diversification and peace of mind. The best part? You can set it, forget it, and let compounding handle the rest. Chapter 9. The Enemy Called Impulse. The greatest threat to your portfolio isn't the economy, it's your own behavior. Every time you buy out of excitement or sell out of fear, you lose something far more valuable than money. You lose discipline and momentum. The market has one simple rule. It punishes impatience and rewards those who can stay calm when everyone else loses control. Volatility is not a sign of failure. It's the heartbeat of the market. Crashes aren't permanent. They're hidden opportunities waiting for patient investors to act. When others panic, that's your signal to prepare, not to run. History has proven this time and time again. Every crash has eventually led to a recovery. The market always rises again, and those who wait long enough are the ones who truly win in the end. Chapter 10. The Long Game of Wealth. Here's a secret the rich already know. Wealth isn't built by doing more. It's built by doing less, but doing it longer. The stock market isn't about speed. It's about endurance. You don't have to make perfect decisions, just consistent ones. Small, steady investments beat big, emotional bets every time. However, most people will never experience this because they give up too soon. The longer you stay invested, the more the odds tilt in your favor. So the final rule: stay in the game long enough to win. Conclusion. So, what if the path to wealth was never about chasing big wins, but mastering small habits? What if you realized that the only investing guide you'll ever need isn't about predicting markets, but understanding yourself? Because in the end, investing isn't about stocks. It's about patience, consistency, and belief in the future. You now know the rules, the mindset, and the secrets the wealthy have used for decades. But here's your next step. Take action. Start small, stay consistent, and watch the magic of compounding do its job. If you found this guide helpful and want more real, human conversations about money, mindset, and success, make sure to subscribe, drop a like, and turn on notifications so you never miss what's coming next.